The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon. It's a beautiful, wonderful Friday, March 16th. I'm also glad that you could tune in. You really don't tune anymore. You really click in for a podcast, but it's kind of nice to have a button that you could set. I kind of remember the old AM radio. You'd pull out the little button, turn the tuner, and then push it in, and then hopefully that's where it would actually tune when you push the button. Oh, boy. I always remember my dad having a Cadillac. It was so interesting to watch the little thing turn automatically. Now we have everything's all digital today, so don't have all that kind of whiz-bang stuff anymore. It's all LED displays. Of course, it works 10 times better, but it's kind of... for some reason, I was thinking about turning an actual dial last night, and I thought, when's the last time I've actually been able to turn a dial on anything? It's been a little bit. Anyway, it is quad witching expiration today. We had just a lot of action early on in the day. Massive volume in the first 15 minutes. We had somewhere around 700 million shares in the first 10 minutes on the New York Stock Exchange. And since then, it's been rather quiet and extremely flat. But it is what it is. It's expiration day, and we're up, just a little bit. Let me see what we have here as we speak. Up 2 on the S&P, but very, very little, if any, volume since the rest of the day. We might have a really exciting last 30 minutes of the day. There are a lot of things that look like someone might want to try to push this market around, but we'll know here in about 22, 23 minutes, something like that, about how this thing's going to come about. But it looks, for the most part, that they're trying to close this market down right around 1,400 on the S&P and blow away as many of those future contracts as they did this morning, and then, probably a lot of option contracts at the close of the day here. But very, very kind of quiet day out here. Things that you should be aware of. Iran is going off the Swift computers as of Saturday, so that will be tomorrow somewhere around noon. What does that mean? It will be very tough, if almost impossible, to wire transfer money in and out of Iran. The Swift computers, you can Google it if you're really excited about it, but basically it is the international banking system's routing system for wire transfers and money, wiring money around the world. And without that, there's no way to clear checks. So effectively, Iran is back to handing money back and forth. Of course, these sanctions were pushed by the European nations because they've, if you think we're kind of worried about Iran, they're very worried because the missiles can easily reach a lot of the places in Eastern Europe with no problem at all. And, of course, they act like insane nuts in Iran, especially, the leaders do, let me put it that way. And it's very tough for them to figure out what to do. In a related kind of news, 4 minesweepers were sent to the Gulf yesterday and will be joining 3, count them, 3 carrier task force in the Gulf starting early Monday. So there's going to be a lot of hardware. Carrier task force, probably 6 ships apiece, a couple of screens, probably a submarine that you'll never hear about sitting up underneath it, or maybe up in front of it, looking for mines, that kind of stuff. But going to be a lot of our guys in the Gulf this weekend, and with the computers being off and Iran having a tough time wiring money around, look for it to become somewhat hot in the Gulf over the weekend. China infighting is still going on. The hardline Maoists, Little Red Book communists are still trying to fight a lot of power struggles going on in China. Didn't seem to affect the market much like it did on Wednesday, but do keep a very close eye on that. The hardliners, just like they in Russia, would love to get back in power. No one in the outside the ruling community much likes them, but they still wield a huge amount of power. Most of them control a lot of the industries which are underneath the banner of their military, why they may be communists, they've probably run off with more money from China than anybody else. So it's kind of tough to see how that's going to play out, especially China's not very open, and you really keep an eye on that. That could be very China. Shanghai index once again down hard, like we saw on Wednesday. The consumer confidence numbers came out. They were fairly weak. I think that was somewhat predictable. Predictable in the sense that these are the first numbers picking up the majority of the cost changes in gasoline, and the higher prices almost always correlate very closely to the confidence numbers. So be very interesting to see how that plays out. But if we continue to see higher gas, watch for those confidence numbers to actually go down, probably pretty much tick for tick. In the news, Connecticut lawmakers are considering a download tax. Already 25 states around the country have already begun taxing digital downloads. Theirs would be on the high side of things at 6.35% tax on any electronic transfer. And that would be including anything you download from Amazon, if you download a book. And they're talking about trying to find a way to actually tax downloads whether or not you paid for them at all. So that would actually be a bit tax. So everybody in the online community is watching Connecticut and just seeing how far they may go. But we could see a huge move in companies that don't charge anything. We'll say Google. If they've started getting taxes for every time you went to Google and searched for something, maybe the end of free internet searches as we know it, if they started charging a nice little tax on everything that goes across the wires. But kind of interesting. 25 states already have done it, but it looks like Connecticut is going to probably go the farthest, and they're debating that actually today. Big Brother. Cameras at UK petrol stations will automatically stop uninsured or untaxed vehicles from being filled with fuel. Literally, when you pull into a gas station in England, it reads your license plate before it will allow you to actually fill the tank. I guess you can go prepay and everything, but if you pull in there, every one of the license plates is automatically checked and tracked. We've got, I guess maybe we're being a little complacent, but in the UK, they have, I think in London, over 20,000 cameras. It's become, I guess maybe Orwell was right in that he was from England already, that they'd be the first one to go Orwellian. And it's very interesting. But apparently there's 1.4 million motorists who drive without insurance. And not only will you have to prepay, but even if you prepay, this new system that they're pushing would automatically turn the pump off and not let it turn on until a plate that had come in and all the taxes were paid and your insurance was confirmed would allow you to actually put gas in your car. I don't know. It just seems kind of sick to me, but the whole automatic number plate recognition systems, which are mostly out of Israel, by the way. A lot of software development in Israel these days, but the bulk of this automatic number plate recognition systems were developed there and now have become hugely used in the UK. But I don't know. This says this smacks of Big Brother to me. iPad leads to 750 pounds of meth. For those people that don't have an iPad or an iPhone, they are one of the hottest things to steal on the streets of New York and other big cities. Most of them have the batteries pulled out within 30 seconds, and they actually sell them in huge numbers and ship them back overseas, especially to China, where they're a lot of times sell for 3 or 4 times as much. So they are a huge product for theft in these large cities. In San Jose, there's an application called Find My iPad in iOS, and you can go back and find it. Well, apparently someone with 750 pounds of meth actually ended up with a stolen iPad device, and when they went and found the iPad and got a search warrant, when they went in there, they found 750 pounds of meth. All told, the meth is worth about $35 million on the street. I always wondered about how they figured that out. But anyway, is it like worth $10 million wholesale and $35 million on the street, or $20 million on wholesale and $35 million on the street? They never tell you what the wholesale value is. I always wondered that. Anyway, the seizure was like the second or third largest bust in 5 years of total meth. And this shows you that a lot of these new technologies are going to make it much harder to find products if you actually continue to use them in the United States. In a kind of related news, this same Find My iPad feature was used in Scandinavia. And after they arrested the person that found the stolen iPad, they basically said that just because the iPad was telling you it was there wasn't enough. And they actually let the thief go, even though he was found with it. And I guess the people actually identified him. But they said that wasn't enough actually to get a warrant. So different laws across the country, but not only can you be found with your iPad or your iPhone, but you can find it when it's lost. But I think there's similar kind of products out there for Android. I've never really worried about it too much, but it's kind of interesting that these products are almost becoming self-aware. Little Terminator reference there for you folks out there. Anyway, we're done with that. We're going to be going to some stocks and taking a look at those as soon as we come back. You can always give me a call. In fact, really, it's a good day to 877-927-6648.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakouts gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, just taking a quick look, coming in at, 1403 on the S&P, up 1 point. So not much happening, off about 3 on the NASDAQ. And you can give me a call. In fact, I would appreciate it at 877-927-6648. We're going to look at a few stocks. One of them is Dun & Bradstreet, DNB Corporation. Symbol is DNB. We've seen a lot of stocks do this over the last few days, and we're going to get just a little bit closer on a few of these. DNB, what I'm looking at is the 85.43 high. That is on February 3rd. 460,000 shares. We've hung up here about 4 days. Looks like we're going to do a doji today. But about half that, about 200,000 shares, maybe a little over each day. Going to probably do 250, maybe 240 today on DNB. And going to be very interesting. This one has had some fairly weak volume up and a nice little gap out there. That gap comes in at about $83. We could see a nice little pullback, I think, in this market. And there's a lot of these gaps probably going to setting up some level of maybe an ABC up, but looking for a nice pop. Another one I wanted to look at was Diamond Offshore Drilling. Symbol is a DO. We've been kind of skirting around this high. We actually have a little pop. The volume hasn't quite come in yet today, but it's not going to be that weak. But we are looking at, I think, some of these drilling companies seeing the political risk in the Gulf this weekend. Diamond Offshore is actually close to a breakout, but of course not going to have the volume today. The February 28th high, $69.97, 2.6 million shares, 2.1 now. So we maybe come in at 2.3, something like that by the end of the day, depending on when it comes up. So we are going to break out with a little lighter volume on some of these. One of the other ones, we've been showing a lot of these gold stocks have been coming back to very long-term positions in the marketplace. In the case of Gold Fields, there's a fairly long gap. Let me get back here to it. That kind of started a huge consolidation range. And actually, I've got to be a little bit bullish on these levels for Gold Fields. It can still go a little bit lower. In fact, I'd love for it to go down and check the June 23rd low at $13.62. There's 6.4 million shares down there. We're having kind of a light volume day today, 3.5 million shares. So as we get down into this gap, that actual gap up happened on 6/28 of 2011 and had 4.5 million shares. So we're into that gap now. Going to need a lot more. Like I said, when we're looking at 3.6 million shares, probably 3.8 by the end of the day here. This is a great consolidation pattern. You've got a high volume low that has been untested out here. You'd really like to get into that wonderful low out there of that June 23rd low of 2011 out here at $13.62. A lot of times these moves in gold are a little bit different, and I wrote about it this week in my newsletter, and that is commodities tend to turn on fireworks, let me put it that way, and stocks and equities really turn big time on basically complacency or even a lack of interest. I love to see stocks actually come down and test multiple times on lighter volume each time. A lot of times, especially in commodities like gold, you'll see cataclysmic or euphoric selling and monstrous volumes at the turning points that would keep me away of a stock that would, let's say, be in the tech sector. I like to buy, just ambivalence and sell ambivalence at highs and buy it at lows in technology or other stocks. But commodities, normally you can see these huge moves like we've seen in gold, that it couldn't really go back and blow out the low again today, was very, very interesting to me. I guess we can look at GLD real quick, the Spider Trust. All these, I think, we have just, maybe we've had that pretty good volume day in GLD 2 days ago with 20 million shares, 12 million yesterday, going to be about 10 million today. I would still love for it to come back into this gap that runs, what is that? About 157 up to 158.5, something like that. And test it. But we've had a doji, which is normally the halfway mark. So if we get in there light volume, we might actually find a turnaround in gold.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
When we come back, we are back now, but I was asking you if you wanted to give me a call. You can at 877-927-6648, and we'll discuss your particular stock. One of the things that I found on my scans, every night I go through about 5,000 stocks and find stocks that were at previous highs and lows that have, significant different volume. One of the ones I found was Kirby Corporation. Symbol is KEX. They transport a lot of oil stocks, that kind of stuff. Kind of an interesting company. But one of the things that's interesting to me is that I'm finding a few of these up here at make or break points. Kirby Corporation, KEX. And what I see on that is the January 20th high with 860,000 shares, $70.22. It has gone above it. It has gone below it now with lighter volume, 570,000 shares. And that was on, the 13th. We have pulled back. The energy has been fairly different than the huge move up. So we're setting up some nice double tops in this marketplace. The other one that I saw come up with the same kind of symbol is, I guess it's Tesoro, which is another oil refinery company. But we've seen these test previous highs on significantly lighter volume. 2 on Tesoro, symbol is TSO, the November 9th high, $29.61, 8.1 million shares. We've been gingerly coming through this these highs on 3 to 3.8, something like that, million shares. Today we're going to be doing about 2 million shares, and really looking at maybe setting up a nice low volume doji, which is always problematic. But we've got a couple of those stocks. The other ones that are kind of telling me a similar story are connectors. Both Amphenol and Molex are big connector companies. They, anytime you plug anything in and out of a computer now or a car, it's always got a plastic connector with 5 pins or 100 pins on it, and it looks like a harmonica. And you plug it in one side, and you just have to unplug it. So there's no real soldering things in anymore. You just plug components in, pull components out. But the companies that make those connectors in everything, whether you're talking about a tractor, trailer rig, somebody's individual car, or any kind of machinery, even a forklift, all the stuff, components in it are pretty much all plug and play. There's no soldering or wiring things back in anymore. Those connectors are a pretty good indication of the manufacturing strength of a market. And one of the things we see is Amphenol, APH, testing a previous high. I'm looking at the $57.34 high out here, 1.2 million shares on May 11th. We've gotten into that last few days, and that's on 487,000 shares and 521,000 shares and 338,000 shares yesterday, and probably going to come out with about 450,000 shares today. So when you go that, you start seeing these birds of a feather flocking together. We look at a similar company like Molex. Another one pretty much showing the exact same thing, MOLX. Both of these, again, make lots of little connectors for everybody to plug everything back and forth, left and right. The May 5th high, $28.10, 1.8 million shares at 28.10. We've come up into that last few days, and again, this is another one that's come up here with very kind of finding its resistance levels. 400,000 shares, 700,000 shares, 600,000 shares, and today might do 500,000 shares. So we are up at these highs, 28.16. So we have gone above it. We are kind of probably setting up to go below it. But finding a lot of resistance in some of these kind of third-party and divergent stocks. Let's see real quick. And let's see. What else do I want to look at? GFI, DO, DB, CVX. Chevron, when we were talking about the oil sector, another one that has come up on my screen, certainly banging away at these resistance levels. On April 8th, 109.30, actually 109.94, 8.4 million shares. You had 8.3 million shares on July 21st as you hit the high, 14 million shares on October 27th at $110. You get to January 3rd at $110 and 99 cents, 11 million shares. So what do we get here on March 14th? Get up to $112.28, 8.3 million shares. You get a kind of nice little inverted hammer out here. Going to have yet another doji today on about 800,000 or 8 million shares. Let me put it that way. So we've got a lot of these petroleum stocks setting up for fairly strong resistance levels. Again, with all the problems in the Gulf, it looks rather speculative hanging out at these highs with very, very light volume. When we look at small caps, the Russell share, the iShares Russell 3000 Index Fund is another one that seems to be topping out for us out here on light volume. IWV, the May 2nd high is basically what we've been coming up against, $82.11, just under 200,000 shares. And we look at these last few days, That 82.11 was what we were going over. We got to a high today at $83.56, but 125,000 shares. You'd be very worried about this thing coming back and closing below that 82.11. You also have a high out here on July 7th at $81.30. So it would take about a buck or two on IWV on the Russell 3000 to basically pull right back into this. Now, the energy going up wasn't all that bad. It was maybe about 10% light, which makes me think that you probably don't have a good chance of breaking out here. If you pulled back to the lows, let me find it here. Those lows would come in at $79.53 on March 6th. You certainly could pull back at that level and start seeing some level of support. You've got a gap up there that also comes back. And right now, I'm kind of thinking that we would, from all the stocks I'm seeing, that it wouldn't be a big deal to see these things pull back just a little, and before they take one more rung and run, and maybe find 1425 for the S&P as the high. I noticed somebody in the den had been talking about bulk carriers. I think we brought this one up the other day, either Wednesday or Monday. I guess it was Wednesday, as this one was making a fairly decent low. It's had a little bit of a bounce out here. It is a penny stock, but not a bad movement out there. Let's see. And that is Star Bulk Carriers, SBLK. I know Tom's really been on these bulk carriers. The December 28th low out here at 86 cents, 1.5 million shares, got awful close to it. Didn't touch at 88 cents on March 14th, but certainly came in with half the volume. Getting into that level with 50% volume, probably going to have a little bit of an automatic rally. I'd like to see this thing come back and actually test that 86 cents exactly. But if you're looking for a stock that could probably go back up to 120, $1.26, something like that, may have a nice little base out here at these levels. If you got a nice little move out of this thing, and really bulk carriers do come back, there's a nice big fat gap out here at about $1.80, running up to about $2, and that's what I'm looking at if this thing could actually turn around a bit. So we've got a few more minutes left in the show here. If you want, always, you can give me a call at 877-927-6648. Tonight, we're going to have Steve Rhodes doing the 4 to 5 hour. I'll be back with him in the 5 to 6 hour. We'll be talking nothing but technology for the last 3 quarters of the show out there. So if you were looking at finding out a little bit more about technology, you certainly can do that. Let me see what I've got. Tupperware Corporation, which is another one that's out here. It had a huge slam down coming back on, what is that? That was the 9/9, so it was September 9th. We've gotten back up to that gap and turned right around. That gap came down on 700,000 shares. It got to about what do we got here? Fairly light volume, actually, the last few days. 400,000 shares, 250,000 shares, 285,000 shares, 351,000 shares. Actually doing kind of a little retest of high volume we saw back, about the end of January, or a little bit more as we got back up into that resistance level in Tupperware. What I really like about this one as a possible short is the energy is about 25% back up to this little gap here. Actually looking very interesting. Another ones that companies that have been doing very well, but I think are probably getting awful close to being at the end of the road, are some of the GPS stocks. They've done very well by selling software and getting out of the hardware business for the most part. Software margins are doing pretty good for these guys. But with everything having a GPS chip in it already, these guys are finding ways of selling to both the military and like airlines with their airline approach plates, and books for their the books for their airplanes, everything else going on and going digital. since a lot of those approach plates get updated, you can actually update them every day. I think they used to do them every 90 days, which meant for a lot of trash and potentially running over old maps that may be out of date. One of the things here we did notice, though, so this is one of the few that I thought was probably going to have a problem getting over with any volume of previous high. Trimble TRMB did see that April 1st high of 2011 at $52.30, 770,000 shares. We had 1 million shares as it went through that yesterday, and it is showing a little bit of strength out here. So I may be a little wrong on these stocks topping out here, but one of the few ones actually seeing the kind of volume that you would like to see at these highs. Let's see, trying to remember the other one because I think it actually did it. Tiffany was another one that I thought was very interesting that I saw over the last few days. Another one that's had huge volume down on gaps. It's actually filled the first larger gap, but we had kind of like a little reversal signal back on the October the 28th. Pretty much remember that being an earnings-related thing. Got down as low as $58.61. But what I'm looking at is it bouncing off this gap. And that gap did have fairly high volume, 9.8 million shares. Got into it on the 14th with 2.1 million shares. Pretty good indication when we start hitting these levels at 25% of the previous down volume, you're probably not going to get too far into those levels before this thing starts turning around. And we had that in Tiffany's. Symbol is TIF. If you're just listening to me and not watching like you should be on Tiger TV. Let's see. Let's get to our next stock here. I'm trying to remember. Chevron. Citrix Systems, another one that we were looking at. CTXS, another one that's tapping these highs at very, very light volume. Had a little bit of energy going in to this high back on the 8th, where we actually had almost 4 million shares. But since then, been really falling off with everything under 2 and down as low as 1 and 1.2 million shares. What we're really looking at is a $78 high on October 27th, 7.8 million shares. We've gone above that. Looks like we're going to close 78.30. Yeah. So we're still just a little bit above it. You still need it to close below $78. But we have to kind of keep a close eye on this. This thing could fairly easily close back below the that high, and certainly not having a lot of energy since that last day, the 3.8, so about a week ago, where you actually had some decent volume and testing these highs. There is a little longer gap up here that it could still be reaching for, and that's at $81, $82 gap that comes back from another big move off the top, and that was back in, it looks like June 8th, where we come back. We're going to break now. Still have a few minutes left. If you would like, give me a call, 877-927-6648.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we come back, we've got just a few minutes before we wrap up the show. Like I said, we are going to be on with Steve Rhodes in the second hour tonight on the Big Tom O'Brien Show, sitting in for him while he's off on vacation. We're going to be talking a little bit about Apple during that show and about long-term investment trends. We're going to use Apple as an example. We were kind of laughing a little bit about people actually standing in line to buy iPads this morning. The funny thing is that you could go over to Walmart, not stand in line, and buy one at 12:01 here in Tampa last night. What I can't figure out is the almost cultish behavior. It'd be different if they were probably giving me an iPad, but I don't know if I'd ever stand in line for one. Maybe I would when I was 15 or 18 or something, and I was a huge fanboy. the products are great, but, it's just, you're really going to stand in line? I don't know. To me, it always kind of, anybody that showed that much devotion to a product that, wasn't really into it. It's kind of like a car guy not knowing how his engine turns over. I can understand car guys that like to go in there and work on their own car and everything. But it's kind of a little different to me when you look at Apple, the kind of fan base that's almost, I don't know, it just kind of makes me feel a little dirty, with that kind of almost cultish devotion to the products on it. Yeah, is it a great company? Can you buy it? Can you love it? Am I going to stand in line for a few hours? Not a chance. Anyway, when we're looking at Apple today here, it looks like we have kind of the basic setup for maybe a small blow-off top in Apple. That it couldn't run today with all the news, and that we are going to be setting up a little doji here is a little problematic. Probably 80% chance we come back and fill this tiny gap that we set up here over the last few days off that high volume. So can it come back down on Monday to, what is that going to be about, high? It's going to be about 568, 569 and fill that gap? I don't think it would be that beyond the pale. But when you go back to it, the story originated, although a lot of people have acquired the story and told it as their own. The apocryphal story is Joe Kennedy getting his shoes shined, and some shoe shine boy telling him about a stock that he was playing on the big board, and that he wasn't going to have to shine shoes anymore after this thing took off. He, of course, immediately ran to the New York Stock Exchange and sold all his stocks, and within about a week, the market started selling off real well. And that's the problem with these cultish stocks with slavish devotion. It's very hard to get a real read on whether or not what they're going to do because of the players that are behind it. But just as we look at this, we're going to talk a little bit about buying this long term, and whether or not you should have traded in and out of Apple if you would have thought it was a great investment vehicle. But one thing's absolutely for sure out here, that it's probably not one stock you want to be shorting much, but at the same time, does it make a lot of sense to be buying something up here at this level? If you sell, someone else has got to buy. So, unless you're short, it's kind of hard for me to understand anybody that would be buying at this level. Certainly, if I wanted to buy this thing, it would have to come back to about 420 and hit that major gap up from the 25th of January. Anyway, you all have a great day and a safe day. We'll see you in just about an hour and 20 minutes. Hang on for Steve Rhodes.